Hello friends, good week. How are you today? How was your weekend? I hope you've had good time and you rest after the last Friday with all the last news from the European Economic Summit. Before we go for that, just a time to mention and to remind in 1 hour and so Italy and Spain on the final of Europe, right? It's going to be wonderful and very, very, very interesting, that's for sure. But football from one side, trading from other side, and we are waiting for an interesting week. Let's start first of all with what happened. The market flied up after, well, kind of good news from Europe. But is that really good news? For short run, clearly yes, but for long run, we stay with the same problem. Where is the money, right? Where will the money come from? Alright, so they will put more regulation, more check-ins, blah 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 blah, before the money will go, right? To the country that need it. And the money will go directly to the bank sector, but where will this money come from? So alright, so they did find some solution. No Eurobonds. Pay attention. Merkel said, and she had a word, no Eurobonds yet, at least, right? So they did find something to go with, at least for the short run. But for long run, the problem is still here. From my point of view, and I know that I'm not the only one with that view, Germany wants the euro dollar somewhere around 1.1, 1 maybe parity level, because that's the level where the European economic could start to grow from. Remember what happened with QE number 3, right? Remember? QE number, sorry, 1 and 2. Remember what happened? Right? They pushed money. They wanted very, very, very weak US dollar, just to let the economy to start to recover itself. Europe will probably try to do the same. So the question is, how long the euro dollar could go up? How long the market can go up? I think it's going up right now, right? It's, from my point of view, it's not any question, unless the market opens with a bullish gap, strong gap, right? Unless it opens with very strong gap, like 100 or 150 points, that would be a warning sign from my point of view. Let's go for the chart and let's see what do we have. Let's start with the euro dollar. We have a very interesting situation here. On monthly chart, it holds the resistance right now. It used to be a support. It holds the resistance right now around 126.60-ish, right? On the monthly chart. The stochastic on the monthly is still bearish. The MACD is still bearish. The RSI even still bearish after it did break below this trend line. Based on monthly, we definitely have more where to go. And if we treat that as a triangle, right? We have 1, 2, 3, 4, 5, 6, little up, and a 7 spot. Means it can go and go and go. Right? That's based to monthly. It should take time, but that's based to monthly. Based to weekly, same story. That's the resistance it still holds, right? But remember this divergence we talked about a few weeks ago? If it successfully breaks and holds above this resistance during the next week, then it should give the euro dollar a bullish push to go up. How long? Well, there are several potential levels. This is the first one, the long one, but we have also the short one, this one, going closer to the 200 moving average, means around 130. So from my point of view, if the 126.50 will be broken and will hold above this level, then and only then the euro dollar should face up and go to 130 at least, maybe even higher. If this level will not be broken, friends, I suggest we all start to watch for a potential sideways move, like 1, 2, 3, maybe 4 forming now, maybe then 5, maybe then another 6, and then the euro dollar could break down again. It's very sensitive, it's very difficult to predict what and how, because we are now on critical levels. If I have to bet, I bet up for a short run for a few weeks. Why short? Because the real problems are there yet. The real problems are there yet. And there is an old saying, if I try to translate it from Russian, right? You cannot cover a loan by another loan without having problems. That's insane if I make it simple, right? And that's what they do. Imagine you're buying a house and you don't have the money and you have to pay the loan. You take another loan to pay the previous loan, right? So you successfully pay somehow the previous loan, but this loan continues to grow and becomes bigger, and then you look for another loan and blah 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 blah, right? Until very bad situation happens. The only thing that I see a solution is that when the right time comes, it could take a few years even, but they will just erase the debt. That's the only situation, credit situation I can imagine that will happen at the end, or just remove it for longer run debts, right? Well, anyway, as for now, we're on a short run, and from my point of view, for the euro dollar, well, you have my opinion. I shared with you everything. Let's take a look at the pound dollar. Pound dollar is right now on fighting and sitting somewhere around the 200 moving average and the resistance around 157.40, 50 area, right? It tries to break up, and if it successfully does on the daily chart above the 157.40, the pound dollar should find the strength to move forward up to 159.50 and maybe even back to 161 again, right? The level to break should be this area around 157.40, 50 area. If we want the pound dollar to go down, right, we have to watch the pound dollar breaking below this area, which is around 155. Breaking below this area would open the doors for 200 pips more down. Breaking below 153 will open the doors for a crash. But it looks still like not a reality, right? If we take a look on the weekly chart, pay attention. There is a 20 MA of the Bollinger that still holds, right? And RSI still below 50. So despite of all the Polish situation and environment, the charts are not ready yet. One of the reasons is that the summit were on the close to the weekend, so nothing really. No one has enough days, enough time to affect for a longer run. That's my opinion for the pound. Let's move on. Aussie dollar, it seems after the break of this trend line, right, and kind of a hold right here, the Aussie dollar reached the 200 moving average and the 102.50, which is very strong resistance, as you can see. Breaking above this level, which should happen and could happen easily, should push the Aussie dollar for further up move. The next area for the Aussie dollar should be around 104.50, like 200 pips higher, and the next and the final area as for now should be around 106.50. So we have 200 pips steps up, right? For Aussie dollar to go down, it should place itself again below the 0.99. Only then we can discuss about sales. From a weekly point of view, there is definitely also a bullish push. It from one side it sits exactly on the 20 MA. From other side, RSI tries to push above 50. If it successfully does, it has more to go. But only time will tell us if that's about to happen or not. New Zealandian dollar, same story exactly. It has more to push, at least to 0.81. Breaking above 0.81 should take us to 0.8250, and that's the range for Aussie dollar. For New Zealand dollar, sorry. What I would recommend to do is to start watching this potential divergence. I know we cannot call the divergence right now when the price is going up, but let's see how strong this up move will be. Right? If it's moving slower than expected, then it could easily build a divergence right here on the histogram. So definitely something to watch. What else? Let's take a look on the dollar yen. It's just an interesting pair. I have a feeling that within the next period, and the period I don't mean by a week, for the next, I would say, few months, maybe weeks, maybe months, I believe that we are going to see some strong push up. I'm talking mainly because of the monthly chart. Monthly chart had a monster divergence. The pair has had a clear down move, more than 20 candles right here on the Bollingers, and never tested completely yet the Bollinger Bands. Right now, it tries to make it so. Right? I have a feeling, and maybe it's not just a feeling, maybe it's also confirmed or supported by fundamental view, and I do not think that the Japanese bank could give the yen to strengthen up so fast again, so strong again. So from my point of view, it might be a head and shoulders here on a monthly chart, and a break above this trend line with the next few months above the 83, then will open the doors from my point of view for the pair to go up to 100 level. I know right now you think I'm crazy, right? But looking on the charts, that's strong feeling, strong view that I have. Anyway, talking on the bottoms, I cannot imagine the dollar yen, and that's far from here, I know, but still, I cannot imagine the dollar yen below 65. It just, from my point of view, cannot happen, as then the Japanese economy, which is one of the biggest yet, right, would crush, and I don't think they will let it go. That's why I think the dollar yen will start moving very, very up very soon. That's my opinion, and that's why I'm bullish here. Alright, let's continue. The next interesting pair to watch will be the Aussie against the Canadian. Pay attention, the pair is moving up right now and it's going to make something interesting. First of all, we have this line which stopped right here beautifully, this pair. Then it moved up, and now, pay attention, we also have this line, and it seems it's going to test it. This level is around 105, maybe a little bit higher, maybe even 106. On this level we might have a bearish hidden divergence for the Aussie against the Canadian. You see that, friends? Here you go. Right? At this level, within the next few weeks, we might have the pair stops creating bearish hidden divergence, and then on daily chart we will see a bearish continuing divergence. You see that? If it pushed higher, 105, maybe higher around 106, that's what we get. That's exactly what we will get, right? And this is an area to watch for sales from my point of view. If we talk about wave, then we have had 1, 2, 3, 4, now 5 is forming. That's why I think we are coming to a very top, and from this area Aussie Canadian will start the down move. Let's take a look also on another interesting point of view. Pay attention, friends. After this bullish move and the first deep down move, look what happened. What's that? That's a bearish convergence, right? That's a bearish convergence. This is a bearish convergence. So a combination of a bearish convergence, potential bearish hidden divergence, and a continuing divergence is forming up on the daily chart for Aussie Canadian. It's time to get ready for sales. From my point of view, the day that the Aussie against the Canadian will face down the trend line again, or maybe break it even this time, is very limited. I think we're about to see that. The only problem with this pair is that it has negative swap when we sell that. That's the only problem. But remember, doesn't matter how big the swap is, nothing could be more than the profit of a big move, right? And that's the advantage of the final. Pound New Zealand, Pound Australian, and Euro Australian. Well, as I said not once, it's time to look for buy opportunities. I'm still on same opinion. We have a trend line right here, right? After the small one was broken, after a fight, it was broken. We have a continuing divergence. I would not be surprised if Pound New Zealandian will break below 159, 195, sorry. Will face 193, maybe even 190, right? But it will continue the divergence. Maybe RSI come extreme, and then we get very powerful of around 8, maybe 1,800, or maybe 1,000, or maybe more pips up move. So from my point of view, it's time to jump in and be there, and every down move for Pound Kiwi will be reflected powerfully up. Same story with Pound Aussie, as you can see here, right? Just it has a little bit more to go. I would not be surprised if this pair goes again. Here we go, 150 maybe, before it's making a very stiff, maybe even lower, but around 149 before it's making very powerful retrace. Euro Aussie, same story exactly. From my point of view, it's creating a bottom very soon. Maybe it will try to push again to the previous low. Maybe it will try to create a little bit lower, and then to create a wonderful weekly divergence. It's a potential double bottom if it goes lower, right? Or maybe a little bit lower, right? But it seems like we're coming to the end. And based to monthly chart, you see that every push down should come to final. A huge retrace up will come then, based on monthly divergence, but it will take time, that's for sure. Few words about the indices. Well, stay out. I think, as I said, it can go and play bullish around the next period. Maybe it will try to go for a double top, or maybe a little bit higher. I don't know. I'm not sure about the indices. That's why I prefer to stay out. I think it's all fake. I do not believe for a bullish market, especially for the indices. Technically, if it breaks above this line and holds above the 2650 for Nasdaq, then we can discuss about potential up move. Anyway, for any up move which is expected because of fundamental, I still prefer to stay out. I do not believe the indices, none of them. From my point of view, it is fake, and where it's fake, I cannot find myself. So that's my opinion. Even though it could push a little bit higher, it could go and for another bullish push. I just stay out until the next bearish ready to go signal will come. And that's all for today, friends, and that's all for this week. We have a lot. Let's see just how the week opens first, so we can have better understanding about what's really going next. Thank you very much for your time. Enjoy the European final, Spain against Italy. My bet, 2-0 Spain. This time they will score twice. That's my bet. But it's only a bet, right? There is no charts to analyze for this game, so it's just a bet. That's all. I wish you a wonderful week. We'll meet again on the next weekend. Thank you very much. Yours, Vladimir.